Welcome back to the second half of the Future Show here on the TD Ameritrade Network. We're now less than 60 minutes away from the cash open for stocks on Wall Street. Scott Bauer, the CEO of Prosper Trading Academy, joins us to talk commodities. Scott, good morning to you and welcome.
Good morning,
Thank you. Good morning. Crude to $70 to begin the week, a steady grind higher. In a few minutes, we're going to take a look at the dollar and the relationship it shares with crude, but it doesn't seem to be the major catalyst recently. Oftentimes, we tie that back to how the fundamentals are what's driving price.
Absolutely, Ben, and you know it's unbelievable because if you were to be able to take a snapshot of the last year, we have gone from the ultimate demand destruction to now what's almost a supply constraint issue, and that's what is really keeping the tailwinds behind the price of crude right now. And we've seen it, back off a little bit after some I don't want to say disappointing, but some unexpected Chinese numbers the other day about imports. But yeah, I mean the market is still on fire. As you said, it is still grinding higher. And it's all based on reopenings and a complete now flip of what we saw over the last year with massive demand and possibly some supply constraints. I mean, you look at U.S. production, Ben. U.S. production has gone from 13 million barrels a day down to below 11 million barrels a day just here, in and of itself. So that's what we're facing right now. And that's why we're seeing this, these prices that we haven't seen in a couple of years.
Yeah, and speaking of those prices we haven't seen in a couple of years, we actually looked at the daily time frame a minute ago as you were speaking to that point. If we could just pull this chart I have ready, the weekly time frame, because this again speaks to the point Scott just made. We're talking levels this week we haven't seen again since the fall of 2018. And in terms of some of that China data, we were just talking with Adam Evans, our correspondent at TD Ameritrade Asia, and he was saying basically not to worry, not to be too concerned about some of that data. Again, some of those changes coming in theory in terms of some of those weaker numbers. I'm looking at some of the commodity prices here. We were also talking about, how this is a pretty good reflection of what we've seen in terms of demand you were speaking to. And also, the one thing that this ties into, though, is ultimately the inflation concerns. I mean, because another focal point for investors, for traders, when you see crude prices on the rise like this, and, really to the point you made, at the rate that they've been, because if, again, go back to this daily time frame, I mean, it was just last November we were trading $33, Scott. And, right. I mean, this has been a significant run-up here into the end of the year, which has continued throughout the last 6 months here now. And, I mean, that ultimately is going to raise some eyebrows, as we've seen it has, and it's going to spark some inflation concerns.
Oh, there's no doubt about it. And, that certainly leads to next week's Fed meeting and all eyes being on the Fed, and the language that they are going to discuss is going to be, this is going to be just picked apart, a zillion different ways to look at any hint of how they are dealing with inflation and how they're not even thinking about raising rates anymore.
And then, Scott, to that point, it's not only important to watch in terms of the Fed as far as the language they use, but this as far as investors, as traders, as consumers. I mean, ultimately, the ripple effect in terms of crude is what we really talk about, because basically the tentacles, as I like to say, reach widespread in terms of the impact that higher crude prices have. We're talking everything from shipping across the board, and especially as we head into the summer months, the summer driving season, and vacations that all of us, our families tend to or plan to make. I mean, ultimately, less in our pocketbooks means spending a little bit less at, some of the destinations that we're going to. I mean, this really factors into ultimately the ripple effect here is what I focus on.
Right. I was just going to bring that up. You pay an extra $20 at the pump a week, or $15, whatever it is. And, that could cost a family maybe a meal out a week, or an extra trip to a retailer to buy something that they ordinarily would, that now they can't. So you're right. The tentacles, the reach from what's happening here with crude pricing is very, very far reaching.
To that point, a real quick look, a couple other products that have been on the move as well. Here's RBOB Scott. This is the gasoline futures. Took a little while for it to participate. Actually tried to get things going. If you remember back in May, we talked about how it failed attempt to the upside. It pulled back a little bit, but held above the $2 level, and now is really participating. And we were just talking about, again, October 2018 levels for the crude. Look at how RBOB actually, let's just go back a little bit further here, because this now appears to be leading a bit here. And you can see, well, RBOB, we're talking levels we haven't seen since the spring of 2018. So it has been and continues to be moving its way higher here. We'll see if all four, Brent, heating oil, RBOB, and the WTI continue to move higher. I wanted your thoughts on copper, because holding near all-time highs, Scott, much like the indices, we were talking about the show at the top of the show, how we're kind of waiting for that next catalyst to the upside. First question, what do you think that is? And ultimately, will we get there? Will we find it? Because infrastructure spending seems to have slowed some, and that was a big part of what was behind precious metals rally, especially copper, lumber. One could argue the housing market more so, but certainly copper was tied to expectations related to.
You know, there are some bigger bearish bets in the marketplace coming in copper futures right now.
Can understand
However,
why.
The fact that copper has held at this massive support right around the 450 level, which we all know had been massive resistance, you know, all-time highs. The fact that it is holding here it's coiling, as we say, and it's getting ready to make a big move, in my opinion, here. And even though, you know, inflation is kicking in, and infrastructure, which we know is coming, infrastructure spending, we know is coming down the line, but it's probably later rather than sooner here. It sure looks to me like copper wants to make a big move here, and it wouldn't surprise me. It would not surprise me to see that break down below 450, but then rocket back up again, Ben, as soon as these infrastructure talks really get going again. And there are some negotiations going on here. I think we're a lot closer to something than we were months ago. The two sides are definitely not, you know, on the same wavelength yet, but they're getting closer here. But, you know, we have seen copper come off of those highs. And again, some of that is due to China numbers. I think, you know, their imports are down about 8% or so. But again, I look from a technical standpoint, that 450 level that it's holding as support now is pretty critical.
Yeah, I'm hearing about how talks have stalled a little bit, but apparently another bipartisan deal is going to be efforted forward. We'll see if we can get something to build in terms of negotiations around that one. Scott, I appreciate you joining us. We'll continue to watch copper again, hopefully for the bulls finding some support around this 450 level ultimately. And as you mentioned, continuing the trend to the upside here, it would be a pretty good reflection of what's playing out in terms of economies, not only here in the U.S., but ultimately globally. And Scott, look forward to having you back on the show in the near future. Do appreciate you joining us to take a look at what's been playing out in terms of some of the commodities here. And